Hey guys, welcome back to another video. Today we're gonna go over the most common missed tax deductions for rental properties for landlords. So for those of you who do not know me, my name is Lenka Joseph and I'm an enrolled agent admitted to practice in front of the IRS, here to assist you with your accounting and tax planning needs, as well as helping you resolve your tax debt with the IRS. So I am your blueprint to financial success. So about the common missed tax deduction for landlords. Well, a lot of it has to do with poor record keeping. So a lot of the time it's not like you as the landlord don't know you had those expenses from the beginning, but because you didn't keep up with it as soon as it happened, by the time it's tax season, it's been 10 months, a year, so it just escape your mind and you totally forgot about it. So let's go ahead and start with those common missed deductions. So the first one that we're gonna go over is refinancing cost. So whenever you have a rental property and you go ahead and refinance the loan on that property, and when you get the closing statement, there's the amortization of the refinancing cost. So pretty much the expense that you accrued to obtain the loan, for example the closing costs, those are things that you can use. Those are expenses that you accrued to refinance the loan. So those are things that you can deduct when it comes to your tax return for that year. So the second deduction is special assessment. A special assessment can be, now let's say that you had to build an elevator. Even the easiest, the most common one is if you had to put a ramp outside the house for a tenant who's disabled or who has a wheelchair to make it more accessible. Those are special assessment. And then again, make sure that you do speak with your accountant to find out if you have to depreciate those specific costs, because sometimes you have to actually depreciate it instead of just deducting it. So there's a difference when it comes to that. And then again, talking about depreciation is one of the biggest one. I know it's so well known, but a lot of people, especially if you don't know how to properly do it, shy away from depreciation, which could lower your tax liabilities for that year, even though you have to recapture it at the end, in the long run when you and if you sell that property. But it might be more beneficial to you to depreciate it now and recapture it later. So then again, those are strategies you have to speak with your accountant with to find out what's the best option for you at the moment. Should you depreciate your property now, or should you not do that because you're gonna have to recapture it? But it can be in your advantage to lower your tax liabilities for that year. Another deduction that are missed a lot is association fees. For example, maintenance fees. And one of the main ones for some reason is lawn care. If you hire someone to cut your grass, it doesn't matter if it's a kid, but obviously if you don't want them to have to pay taxes and you want to do it, I guess, under the table, then you're gonna have to pay for that cost yourself, because obviously you cannot go ahead and expense it out and deduct it, because someone got to pay for those taxes for that income. So it's either you're gonna have to take it as income, because I know some people who've done that. They take it as income for themselves instead of having the kid or whoever it is having to pay that tax. So you end up paying someone else's taxes. And then also the other thing, if you have kids that are cutting your grass, that's actually a good idea right there and then, if they're doing it for multiple people, or if you have a lot of properties, for them to go ahead and build their own business and start being a business owner in their own. And it might even be the taxes might even be lower than yours. So again, that's why it would be a good idea to sit down with your tax accountant to figure out what's best for you, and if it's your child, for your child, because it might be more beneficial for them to pay that tax on that income if it's if it's going to be categorized as their income instead of you, if your tax bracket is higher. The other deduction that is commonly missed is insurance. Yes, insurance. And I know a lot of people are like, well, I know I have insurance. I know I pay for it. I know that I have it to go ahead and expense it out and deduct it. But and then again, it has to do with poor record keeping. A lot of landlords, I do know, they put it on, in their escrow account, and they totally forget about it and about that expense because it was in the escrow account, and they didn't go ahead and deduct it when it comes to taxes. And for example, I had someone last year who gave me their how much they pay for insurance, and right there and there I figured out, but that's all you pay for insurance? Like, who's your carrier? Like, are you sure? How much did you pay a month? And after he told me, I'm like, well, this is all that you gave me. And we were able to figure out how much more he paid in insurance, and go ahead and add that to his the amount he paid for insurance for the year, and lower his tax liabilities even more. Another missed common deduction for landlords are utilities. Yes, I know a lot of it's gonna be like, well, the tenants pay for utilities. I don't pay for utility. Well, that's true, but I know whenever I'm renting it, the first thing I ask, what does the rent include? Does the rent include water and sewage? So, are you paying for what for the water bill for the property? Are you paying for sewage? Well, that's an expense, and that's something you can deduct as well. Another one is broker's commission. So, commission that you pay to get someone to come rent your property. Did you pay a broker to get someone in your property? That is an expense that you can take. And then again, you totally forget about it. Let's say, especially if you had to do it multiple times, or you just did it once, if you didn't put it in your book right there and then, that is something that's easily missed, and something that you could have taken a deduction out to lower your tax liabilities, that a lot of landlords end up forgetting. Another one, again, close to that line, is advertising expenses. The cost the cost of advertising the property for rental, the ads. Like, I know a lot of landlords put their ads for when the property is available on Craigslist. That is an expense that you can deduct. The cost of screening the potential tenants, that's an expense that you can deduct. Did you have to screen the tenant? Did you have to check the credit score? That is something that's coming out of your pocket. For your business, that's something you can deduct as well. So the last one, but not least, missed common deduction is interest paid on loan and credit cards. So most landlords forget to write off interest paid on other loans, other than the mortgage loan and credit cards used for the rental property. If you use a credit card for your rental property, and you accrued, you were charged interest on that credit card, you can expense that interest out. You can deduct that interest out. So those are the missed common deductions for rental properties. Obviously, there are a lot more expenses as a landlord that you can deduct. I just wanted to focus on those common missed deductions because they seem pretty obvious, but they are very often missed when it comes to deducting it in your tax return. The thing is, it's like I said before, it's not like you do not know yourself as the landlord that you paid for those. It's not like the preparer doesn't know that they existed, but because of poor record keeping, they are missed and they are forgetting. And when it comes to tax season, you just want to get your taxes done and while still working your business, and then you forget to think back 10 months from 10 months before, did I use that, did I have that expense, how much of it was it? That is why it's really, again, I'm a broken record. I really do advise that as soon as it happens, that you document it to make sure that you don't forget it. Now to recap, the most common missed tax deductions for rental properties are refinancing cost, special assessments, depreciations, association fees, insurance, utilities, workers' commissions, advertising expenses, and interest paid on loan and credit cards. So make sure that you do not miss deduction for which you possibly eligible for. Work with a professional, not only who specializes in your field, but can also spot certain deduction for which you did not provide documents for, and can assist you with backtracking those expenses. If you have rental properties and you would like to have a customized strategy to make sure that you lower your tax liabilities as much as possible while still staying compliant with the federal and state tax regulations, make sure to book a free 15 minutes consultation call with me now to make sure that I can assist you. So I hope this video helped you guys. Stay tuned for my next video. I'll talk to you guys.